All right, the word of the day is tariffs. President Trump is announcing his new round of reciprocal tariffs on imports this afternoon. It's expected to be wide-ranging and to impact every country the United States does business with. Some of those countries expected to be hit the hardest are the ones with the highest trade deficits. With the U.S., China tops the list, followed by the European Union, Mexico, Switzerland, and Vietnam. We're taking a live look at the White House, where the president is expected to unveil his tariff plan from the Rose Garden at 4 p.m. We begin our team coverage with CBS News White House reporter Willie James Inman, joining us now from the front lawn of the White House. So, Willie James, what do we know about the scope of these tariffs?
Hey there, Vlad. Good to be with you. Well, there's limited information in terms of what the president will announce today, but one thing is clear. The White House is moving forward with this plan to put wide-ranging tariffs, reciprocal tariffs, the White House has said, on those nations. And there have been some talk, some officials have mentioned the dirty 10 or 15. Some of those countries you pointed out there, the countries that have the largest trade deficits with the United States. The president has left a little wiggle room, saying that these tariffs that the U.S. puts on other countries will be a lot fairer than other nations, the other nations that put the tariffs on U.S. exported goods. But still, nonetheless, despite all of that concern about rising prices and how this could affect U.S. consumers, the White House is pushing forward with this, saying that the United States will be able to bring in billions worth of dollars to those collecting those tariffs in the years to come, Vlad. So that's part of it, too, when you take a look at how the White House is looking at this.
All right. So many folks are expecting to be impacted by this, Willie James. I mean, the White House, it's so interesting. I've seen conversations by people in the administration that are sort of signaling that there's going to be a little bit of pain, but that at the end of that pain, there's glory. And it doesn't feel like that for people who are already struggling with prices at the grocery store, at the pump, and in their just regular day-to-day shopping.
Yeah, it really doesn't. And if you look at polling, a recent CBS News poll pointed out that Americans want the president to focus on lowering prices more than what he's doing here with this tariff plan. I'll point out that the estimated tariff revenue you see there projected on your screen there, part of it, a lot of the concern here, Vlad, is that not only could this disrupt supply chain, this could potentially raise prices on consumers. There would be retaliatory tariffs as well. Other nations have promised to do just that, including close trading partners like Canada and Mexico. On top of that, you have the cost to reshore production that a lot of times the president, I should say, he oftentimes says that this will bring business back to the United States. But it takes years to get those factories online. If you have a car manufacturer, for instance, who wants to set up shop here in the United States to avoid those tariffs, it will take several years to not only build that factory, but to get the supply chain in order to be able to do just that, to produce those cars here to avoid those tariffs. So any change in the economy, any change in the way that companies do business will be years down the line. But in the meantime, consumers could feel those price changes in the near future, Vlad.
Yeah, and it's not even a guarantee, Willie James, that they'll bring those manufacturing plants back to the United States. That's just an assumption. So, yeah, we'll see how it all plays out. Willie James Inman for us at the White House. Thank you. Appreciate it. You're taking a live look right now at the Dow as Wall Street braces for those tariffs. Markets have been taking a hit for the past several weeks. CBS News Money Watch correspondent Kelly O'Grady is here in studio to talk more about that. So how are investors feeling this morning?
Pretty jumpy. I think we've seen that over the past couple of weeks, certainly. It's interesting, though, because we just kind of finished the first quarter for the markets, right? We're starting the second quarter. And I went back and I looked at the biggest swings we had, daily swings. And it's never on a day where there's a big tariff announcement.
I noticed that, too. Oh, my gosh.
Right?
It's so funny that you say that. I was actually... Just last week, I was looking, I'm like, okay, every time we're hyping it in the news, tariffs are coming, the tariffs are coming.
Yes.
The markets are generally sort of just low intensity. And it's on the days that we're not paying attention that you see these huge jumps.
Exactly. And that's where so many people have asked me.
Oh my gosh, it's so funny you say that.
We're saying.
And we're saying, yes, you're right.
So many people have said, do you think that the markets are going to, fall today or have a big upswing if maybe the tariffs are less stringent than we're expecting? And I think we're expecting the unexpected. And you've seen some of that priced into the market. And in fact, it's really on the days where we get consumer sentiment data or negative economic data where you start to see those big swings. So yes, investors are jumpy, but we already did see a very big sell-off on Friday. So a lot of the analysts that I'm talking to are saying the people that were worried kind of got out, and the folks that have stayed in are just kind of in a wait-and-see mode.
So what do we expect the effect to be on currency, specifically the U.S. dollar?
Okay, this is really interesting. I'm going to nerd out here for a second because there's two potential impacts. You could see the dollar get weaker because the idea is that tariffs could mean higher prices if companies pass that cost on to the consumer, which leads to higher inflation. When you have higher inflation, the value of the dollar becomes less. However, if you have companies less incentivized to buy products from other countries, there's less of a demand for, let's say, the yen or the euro, because when a company has to import from another country, they normally have to pay in that country's currency. So they're switching from a dollar to, let's say, a euro. If you have less demand for that and more demand for dollars, that strengthens the dollar. That's where the president has said, well, this is actually going to be good long term. So it's really going to be interesting to see how those two dynamics play out in terms of what you actually see the real impact with the dollar.
And so on those everyday goods that we've been talking about, I mean, Willie James just pointed out that if manufacturing does indeed move to the United States, that could lead to some lower prices down the line. Who knows how long that could be. In the immediate short term, let's say between now and the midterms, what could we see?
So you're likely going to see higher prices if companies pass those cost increases on. Now, I think there's a lot of concern about how much would they even be able to do that because consumers are already so price sensitive. Are you going to pay thousands of dollars more for an automobile, or are you just going to hold the one that you have? And in fact, we have this up, the graphic just went up, a CBS News price tracker for items that are likely going to be impacted by tariffs. So you can kind of track over these next few months how this plays out in terms of lumber, groceries, and things like that. I think really, Vlad, consumers, we've seen in the sentiment data, they expect this to cause inflation. And even if it doesn't, you're seeing them already start to pull back because of that concern.
Super nerdy. Harvard Business School, I guess that's what they teach. Very nerdy, but also very informative. Kelly, thank you as always, my friend. Appreciate it.